All right, let's unpack this. Today we're diving deep into Oriental Land Co., OLC for short. You've sent over a ton of info and their 2024 integrated report. It's fascinating. It seems like they're not just about those theme parks.
Yeah.
Today we'll examine how they blend that Disney magic with some serious Japanese business strategy.
Right, it's a potent mix. And this report is our guide to their business segments, financials, and future plans.
Yeah, it's not all about theme parks, although those are definitely iconic.
Absolutely. It looks like they have hotels and a whole resort ecosystem. There are even ventures outside their usual territory. What's the overall picture? What should we be looking for in this deep dive?
I think the key is to watch how OLC balances that creative side, those immersive experiences, with their hard numbers and growth strategy. They seem to be diversifying while staying true to their core mission, making people happy. We'll see if it translates into success.
Okay, I'm ready. But before we jump into the specifics, can we rewind a bit? How did OLC become the ones to bring Disney magic to Japan? Well, their journey began back in 1960 when they were founded, but the big turning point, 1979, that's when they got that license agreement with Walt Disney Productions to bring Disneyland to Japan. A game changer.
That must have been a huge moment. Did that dream actually come true?
Oh, absolutely. In 1983, Tokyo Disneyland opened its gates. It was a new era for leisure in Japan, and they didn't stop there. In 2001, they unveiled Tokyo DisneySea, which is a really unique, nautically themed park.
I've heard amazing things about Disney Sea. It's like stepping into another world. You mentioned earlier that OLC's business model isn't just about theme parks.
You got it. Their report emphasizes three things driving their growth: their employees, those amazing spaces they design, and of course, their loyal guests. It's the interplay of these elements that makes them successful.
Speaking of employees, the report uses the term cast members. Is that significant?
It's more than just a title. It shows how everyone at OLC is a part of the show, contributing to the magic. They're trained in the 5 keys: safety, courtesy, inclusion, show, and efficiency. Even cleaning is seen as a performance.
Wow, that's amazing. I'm starting to see why people love the Disney experience. Okay, let's talk business. The report mentioned record profits for fiscal year 2023. What drove that success?
Well, several factors came together. Their 40th anniversary celebration at Tokyo Disney Resort was a big hit. It attracted huge crowds and boosted revenue. Plus, remember that influx of overseas guests we discussed earlier, that played a big role too. They actually beat their operating profit targets, mainly due to that strong sales growth.
That's impressive. So they're doing great. But what about the future? Any exciting plans?
Their 2024 medium-term plan is pretty ambitious. The highlight: the opening of Fantasy Springs. It's a brand new themed port at Tokyo DisneySea. This is their biggest expansion since 2001. It took 10 years to plan and involved a $320.0 billion investment partner. Talk about commitment.
Fantasy Springs. I've seen the concept art. It's stunning. They're not afraid to put money into those immersive experiences. But how does OLC plan to get back to their shareholders?
It's two-pronged. First, a solid dividend policy. They want those dividends back to pre-pandemic levels. In fiscal year 2023, they even exceeded their target and paid a 13 dividend per share.
That's good for investors. They're walking the walk.
Exactly. Plus, they're doing share buybacks. They want to get back and retire 18 million treasury shares. It shows confidence in their future and could boost earnings per share, which is great for investors.
So growth, dividends, buybacks. Sounds pretty rosy. But every business has its challenges. What is OLC dealing with right now?
Well, one big thing is managing attendance levels throughout the year. They're trying to smooth out those peaks and valleys and encourage people to come during slower times.
Yeah, I can see how that would be tricky. How are they approaching that?
They're testing variable pricing for tickets, higher prices during peak times, lower prices when it's less busy. It's a strategy you see a lot in entertainment and hospitality, like airlines or hotels.
Makes sense. Encourage people to choose less crowded times. Win-win for guests and the company. What about getting more international visitors? That seems to be a big focus for them.
Absolutely. With travel restrictions easing globally, they see huge potential there. But here's something interesting. They're not just chasing profits. OLC is very committed to sustainability, and it's built into their whole business model.
That's great to hear so many companies just talk about it. But it sounds like OLC takes it seriously. What are some of their initiatives?
They have 8 key ESG materiality areas: climate change, employee happiness, promoting recycling. They even want to hit net zero greenhouse gas emissions by 2050.
That's ambitious. What are some concrete things they're doing?
Well, they've switched to recyclable plates in their restaurants. Even some of their costumes are made from recycled materials. Small steps, but they show a real commitment.
So we've covered history, dedication to guest experience, financials, growth plans, and sustainability. What's next? What other parts of their business should we explore before diving into the numbers?
There's one big development you won't want to miss. OLC is going beyond theme parks and hotels. They're setting sail, literally. They're launching Disney cruises based in Japan.
Wow, that's a big move.
Yeah.
What's the strategy there? Why cruises? Why now?
They see it as a third pillar of their business, alongside theme parks and hotels. It's a new way to deliver that immersive Disney entertainment, but on the open sea. It's a bold move, but it fits their growth strategy, diversifying while keeping that focus on creating happiness.
I am hooked. Let's break down each of these business segments and see what makes them tick.
Okay, let's start with the heart of it all, the theme parks. We'll look at the trends, how they're performing, and how they're tackling those attendance challenges we mentioned. Okay, so the theme park segment. It's really the core of OLC's success, where the magic happens, right? And where they make a lot of their money.
Yeah, it's what you think of first, right, when you hear OLC, those famous parks. But they also have hotels and now a cruise line. How do all those fit together?
It's like an ecosystem, you know? The theme parks are the main draw. They bring people in from all over. And then the hotels let people extend that experience, really immerse themselves in that Disney world. And the cruise line adds a whole other dimension, bringing that magic out to sea.
Let's start with the theme parks. The report mentioned some pretty impressive numbers for fiscal year 2023, like 27.51 million visitors. That's a record. What's behind those numbers?
A few things. Their 40th anniversary celebration was a big success. It brought in huge GE crowds. And then the rebound in international tourism has been a major factor. Travel restrictions are easing up. People want to travel. And OLC is in a great position to benefit from that.
It sounds like they went all out for that anniversary. What were some of the highlights?
Special parades, fireworks displays, limited edition merchandise, special food and drinks. It was a whole year of celebrating, designed to get people excited, you know, and bring in both new and repeat visitors.
No wonder they had record attendance. But we talked about this earlier. Managing those attendance levels is a challenge. How's that variable pricing strategy been working out for them?
It's still early, but the results are promising. You know, they've introduced that tiered pricing system, higher prices on weekends and holidays, lower prices during the week, trying to encourage people to visit when it's less crowded.
But doesn't that risk alienating some visitors who are, more sensitive to price, especially families?
That's a fair point. OLC needs to find that balance between making money and keeping things affordable. They've been careful to offer a range of ticket options, discounts for kids, multi-day passes, trying to minimize that risk.
So it's about finding that sweet spot, making it attractive for visitors while also helping the company. What about the different parts of their theme park revenue? Where does the money come from?
Ticket sales are the biggest part, of course, but merchandise and food and beverage sales are also a big chunk. I mean, think about it. You go to a Disney park, you're surrounded by souvenirs and themed restaurants and yummy snacks. It's all part of the experience, and OLC knows how to make the most of it.
Yeah, I'm starting to see how they get those impressive profit margins. Okay, let's move on to the hotel segment. How does that piece fit into their overall strategy?
It's all about extending that theme park experience, giving guests a chance to really immerse themselves in the Disney world. Imagine waking up in a hotel themed after your favorite Disney characters or stories. It's a powerful way to create memories, and it's a big revenue generator for OLC.
The report mentioned they have 6 Disney hotels in Japan. What kind of experiences do they offer?
A little bit of everything, really. They cater to a variety of tastes and budgets. You've got value-oriented options, moderate choices, deluxe accommodations, even a luxury tier. And each hotel has its own theme, its own atmosphere. There's really something for everyone.
It sounds like they've got it all covered. And you mentioned they opened a new hotel recently.
Yes. The Tokyo DisneySea Fantasy Springs Hotel opened in fiscal year 2024. It's their most luxurious hotel yet. And it's directly connected to that new Fantasy Springs-themed port at Tokyo DisneySea.
Smart move. Linking the hotel to a new attraction, it maximizes revenue and keeps people in that Disney world.
Exactly. Synergy. That's the key.
All right, let's talk about the newest part of their portfolio, the Disney Cruise Line Japan. It's still early, but what can you tell us about it?
This is where things get exciting. They announced their plans back in July 2024. The goal is to have it as a third pillar of the business. A bold move, going into a new market with some established players already there.
What's the timeline? When can we expect to see those Disney ships sailing around Japan?
They haven't given a specific launch date yet. They're still working out details, getting the necessary approvals. It's a complex thing, launching a cruise line, especially in a new market.
I bet there are a lot of moving parts. What's their vision for this cruise line? How will it be different from, say, a Disney cruise in the Caribbean?
Well, they haven't released a lot of details yet, but the focus seems to be on creating a Disney experience with a Japanese twist. Imagine cruises that incorporate Japanese culture, food, and destinations, all with that Disney magic. It's a pretty cool idea.
It sounds very appealing,
Uh-uh.
combining the love of Disney with the chance to explore Japan by sea. Okay, so we've got these three interconnected pieces: the theme parks, the hotels, and the upcoming cruise line, all aimed at creating those unforgettable experiences. Now let's shift to the financials. The report mentioned record profits in fiscal year 2023. Can we break down the numbers, see what's driving that success?
Absolutely. Let's start with the income statement. Their net sales for fiscal year 2023 were a record on 618.49 billion. That's up from 483.12 billion the year before.
Wow, that's an increase of over 135 billion. That's amazing growth.
It is. Their operating profit also hit a record, 165.44 billion. That's a 48.8% increase from the previous year. And their operating margin, which measures profitability, went up to a healthy 26.7%. That tells us they're getting more efficient as they grow.
So they're not just growing, they're getting more profitable too. That's a great sign. What about their balance sheet? What does that tell us?
Well, their balance sheet is strong. Their total assets at the end of fiscal year 2023 were 1,355.22 billion, a big increase from the previous year. And their total net assets also went up. That points to a strong equity position.
So they're well capitalized, got a good foundation. What about their cash flow? How well are they managing their cash?
Their cash flow statement looks good. Their operating cash flow, that's the cash from their main operations, it came in at 166.93 billion. That's a 31.4% jump from the year before.
Strong operating cash flow is key. It gives them the resources to invest, pay dividends, and weather any economic storms.
What about their free cash flow? That's the cash they have left after capital expenditures, right? The money they can use for things like dividends and share buybacks.
Yes, and their free cash flow for fiscal year 2023 was 94.85 billion, a big improvement. That healthy free cash flow gives them a lot of options.
Very impressive. It shows they're managing their investments well and generating a good amount of cash that can be used to benefit shareholders. Speaking of which, let's talk about those shareholder-friendly initiatives. They mentioned a dividend of 13 per share in fiscal year 2023. That was higher than their target, right?
It was. They wanted to get dividends back to pre-pandemic levels, and they bit that goal. It shows their commitment to rewarding their shareholders.
What about those share buybacks we talked about? How much are they planning to spend on that? Their plan is to buy back and retire 18 million treasury shares. That reduces the number of shares out there, which can potentially boost earnings per share and the stock price. It shows they believe in the company and want to share the value with investors.
So they're investing in growth, they're paying dividends, they're buying back shares. It all points to a company that's focused on shareholder value.
Yeah.
Pretty impressive track record. Okay, so we've gone over their business segments, those amazing financials, and how they're taking care of shareholders. But something that really stood out to me is how dedicated they are to sustainability. It seems like more than just a trend for them. It's a core part of who they are.
Yeah, I agree. It's more than just checking a box. It's a core part of how they do business. Remember those 8 key ESG materiality areas we talked about? Things like reducing their environmental impact, keeping their employees happy. And they've got big goals too, like reaching net zero greenhouse gas emissions by 2050.
Setting goals is one thing. Actually doing something about it is another. What concrete steps are they taking to make those goals happen?
They're making changes across the board. For example, they've started using recyclable plates at their restaurants. Some of their costumes are even made from recycled materials. And they're actively looking at renewable energy sources. They're even trying to promote a recycling-oriented society, within their reach.
Those are some real tangible changes. It's great to see a company actually walk the walk. But their commitment goes beyond just the environment, right? They also seem to really care about their employees, those cast members.
Oh, absolutely. They know that happy, engaged employees are crucial to success. So they have programs for work-life balance, professional development, creating a positive and inclusive work environment. They even have initiatives specifically focused on the happiness of children.
It fits perfectly with the whole Disney brand, doesn't it? Creating that joy, that magical experience for everyone, not just their guests. Okay, so as we wrap up our deep dives into OLC, what's your overall take on their future? What are your key takeaways?
Well, I think they're a company that gets it. They understand how to blend creativity with smart business. They've got a strong foundation with those theme parks and hotels, and they're taking calculated risks to grow in new areas, like with those cruises. They're financially solid, committed to sustainability, and focused on creating value for their shareholders.
They seem to be in a great position to face whatever comes next. What are some potential challenges they might encounter? What should investors be watching for?
The global economy is always a factor, of course. A big economic downturn could definitely impact tourism and discretionary spending, which would affect OLC. And competition is tough in the entertainment industry. They need to keep innovating to stay ahead. And that cruise line venture, it's a bold move, but it comes with its own risks.
What about their reliance on the Disney brand? Is that a good thing or a potential problem?
It's both, really. The Disney brand is incredibly powerful. I mean, it represents magic, storytelling, those happy memories from childhood. That gives OLC a huge edge. But it also means they're dependent on someone else. What if that relationship changes? Or if the Disney brand loses some of its shine? Those are things to think about.
It's a good reminder that even the most successful companies have to deal with challenges and uncertainty. But OLC has shown that they can adapt, they can innovate, they can create value. It'll be fascinating to see what the future holds for them.
I agree. They've proven that a company can be successful and purpose-driven at the same time. That's a powerful combination.
Well, this has been a really insightful look into the world of Oriental Land Co. Thank you so much for sharing your expertise.
You're welcome. It's
Mhm.
always interesting to examine a company that's creating magic and making smart business decisions.
And for our listeners, here's something to think about. In a world that's often obsessed with quick profits, how can we encourage more businesses to embrace that long-term, sustainable approach that OLC has shown us works so well?
That's a great question and a really important conversation to be having.